Hi everyone, good evening. Colita Camilo. Today I'm here to talk with you a little bit about when is a good time to incorporate a business. We do have that question all the time. When is the best time for me to do it? Should I do it now? Should I wait? So I think first thing we need to make it clear, it is what incorporation means. What does that mean for you and for your business, okay? So when you incorporate, it means that you're setting up your business as its own entity recognized by the state. So we have to do an application with the Secretary of the State they live in. Uh, so they will accept you as a corporation. Being incorporated is not the same thing as registering your business. So they're two different things, and you need to understand what those differences are. So for the corporation, you're gonna set up with the Secretary of the State. You're gonna do, most likely you're gonna do two types of tax returns. You're gonna do the tax return for the business, and then you do your personal tax returns, okay? And when you are sole proprietor, usually there is no separation, that nothing that separates you from your business. When you incorporate, that becomes a reality. You are no longer your business. Your business itself is a separate entity from you, okay? That's why you need to be incorporated with the state. It has to be recognized by the state. In each state, they have their own set of rules, okay? So, and the way you tax also changed once you qualified, when you accept it as a corporation by the state. Um, there are a few types of corporation. It could be a LLC, which can be a single member, a sole member LLC, or you can have more than one member. It could be a multi-members LLC. You could be an S Corp, and it could be a C Corp. So those are the types of incorporations that we have. And there are many factors why you should incorporate your business or not. First factor they need to take in consideration is how much legal protection do you need? Because once you incorporate it, you have a limit liability protection on all your personal assets. Okay, so that's something for you to consider. How much legal protection do you need? In other words, like how much risk you take out there when you're doing your job. Okay. Do you have a location where the customers could come in and they're more likely to have an accident in that location? Or do you have employees? Are they liable for their actions? Or do you sell? Do you sell and make products that will be, they could be ingested by little kids, or something that would give you grounds for somebody to sue you, okay, to have a lawsuit against you. So that would be the first factor that you should take into consideration before incorporate. Another very important factor is how much money do you make? Because for some business owners, being a corporation makes sense just for the financial standpoint. You might not need all the legal protection that you receive, but it might make sense for you when we're talking about all the tax benefits that you get becoming an S Corp. When you tax as an S Corp, you only pay Social Security and Medicare self-employment taxes on the on your payroll part of it. On the profit from your business, you're only going to pay federal taxes, and depending on which state you are, you're going to pay state taxes. So that alone will save you about 15.3% in taxes, which is a lot of money. Okay, but remember, you're not going to pay self-employment taxes on the profit of the business, but you must pay yourself a reasonable compensation to be your salary. Every owner from a corporation, they must, it's not a choice. You must have a salary, which will be considered reasonable compensation for what you do through your payroll. So through your payroll, you're going to pay Social Security, Medicare, and the business is going to pay for the other half employment taxes like you would get paid in any other jobs, okay? As in a C Corp, the entity pays a corporate tax to the profits. So the C Corp, the corporation is going to pay tax on the profit for themselves. On the S Corp, it gets passed through the owners, right? On the C Corp, that doesn't happen. The corporation is going to pay their taxes. And then the owners of the corporation, they'll take only on the money that they take it out on their dividends, okay? So it all depends. You need to sit down with your accountant to make sure where you're standing right now as tax, if you only incorporating due to tax reasons for your tax benefits, it's always a good idea to speak to tax or your accountant or your CPA or tax preparer, whoever helps you make your business decisions to see what will be best for you. Generally speaking, that's what I use for my clients. That usually if I see that a business is making more than $60,000 in profits, taxable profits a year, that's when usually is a good time for you to incorporate. That's when you're going to start saving big money on taxes. And it makes sense for you to do it because corporation, that you have expenses to the corporation too. You do have tax savings that you're going to have, but you are going to have the cost of payroll. You are going to have a cost of setting up the corporation in the reports. You're going to do two tax returns at the end of the year. So I think $60,000, in my opinion, is a good number to go by. Okay. Another option too, to see if you want to qualify for corporation, not to qualify, to apply to become a corporation, is to see if you're going to need business credit. So if you're going to apply for business loan. So if you're thinking about applying for business loans to make sure that your business is going to be able to do things that you're planning on, that you're going to be able to put your projects that you had here in your mind on paper, make sure that things are going to work. It's a good idea for you to create your business credit. And then when your corporation and the business has its own credit, remember business credit works a little bit different than personal credit. You're able to apply for business loans, you're able to apply for credit cards, you're able to open line of credits for the business. You could establish trade lines with the different payment terms that you can have from your vendors. So there's a variety of benefits that you can have by being an S Corp. And all that will be done in your business. Even though you might, when you do a business credit, in most of the applications, you are going to be a guarantor for that loan. However, that won't impact your personal credit. So if you're applying for a house and you have all this liability, but the liability is from the business and the business is paying those liabilities for over 12 months, when you're applying for a mortgage, those liabilities, they won't be considered yours, even though they show your credit, okay? So you're still gonna be liable for most of the times. There are a few banks over there that will let you apply for a business credit card or for business car loan or for some business loan without you being a guarantor. But most of them, you are going to be a guarantor. But if you do it right, if you keep your books right, if you make all the business payments from the business account, all the business debts, all the business loan paid by the business account, when you're applying for personal loan, the bank will be able to see that. They're just a guarantor and the business is taking care and paying out all of their loans and all their bills, okay? Another thing too, if you eventually want to sell your business, it's much easier for you to sell a corporation than to sell a DBA because you can just transfer ownership. And you transfer the ownership, it's a fed at the state, you make the right paperwork with the IRS, it will be easier for you to sell it. You can, so there's many options, contracts, some contracts that you're trying to get, some deals, some contracts we're trying to get the big companies, the big corporations, they want it to be a corporation. If you want to build a brand and you want to protect that brand, make sure that in that state, nobody else is going to be able to use your name. That's another thing you can do with a corporation. That means when I talk about brand, that's inside your state. I don't mean like all the 52 states. So you can build brand, you can do contracts, you can pursue capital funding and investors, you can sell your business eventually. So what my main point is, corporation can be very beneficial for big guys and for little guys, okay? It depends what your plans are. All those topics that I told you about, the protection, the legal protection that you need, tax benefits, and many loans, many factors that are involved with that decision that you need to make. So if you're not sure what to do, if you have any questions, if I left anything out, or if I made you confused with something that I said, please let me know, send me a message. We can set up a consultation so I can go over what the benefits are and what would be good for you and what won't be on my point. If I'm doing your taxes, I can go over that and we can go over payroll. If you're already incorporated, but you saw this live, you were like, oh my God, I don't have payroll. That's the time to do it. You must have payroll. Okay, that's not a choice. It's not, oh, I'm going to think about it. No, you must have payroll. Okay, insurance wise too. So keep that in mind. If you need, like I said, if you have questions, you don't know what to do, give us a call. We can set up a consultation for you. We can go to the office in person. We can do it over the phone. I'm between Orlando and Hyannis all the time. So we'll make it work so I can answer your questions. And then if you have any other questions, like I said, send me a message or send me an email and I'll hope to see you soon. Have a great night, everyone.